Ravi Muthukrishnan joins in to talk about his take on the markets. Ravi, hi, morning. First, a word on the policy. A 25 bips cut should have excited the markets, but the enthusiasm died down pretty soon yesterday. What explains that?
I think, of course, this rate cut was not expected, though. We expected a status quo. But 25 bips is not so meaningful. But then, nonetheless, it is beneficial to some sectors like NBFCs, for instance. They've been bleeding for a long time now. NBFCs, debt-heavy companies, even for banks to some extent. So net-net, there is a small benefit, but not so substantial for the market to be really raving about it.
Right. How do you react to all the projections made on the macros, Ravi?
About inflation, I might have a bit of a concern, because what is probably going to happen now is, after all those concessions we have given in the budget for the farmers, there could be a spike in food inflation, consumption increasing. The overall inflation numbers could be slightly higher than anticipated. But if the oil prices remain at the levels they are today, my sense is that it will cushion out the increase in inflation numbers in the future. So the projection of inflation going down is slightly more aggressive than what we expected. But if those numbers increase because of oil price increases, then my suspicion is that the numbers won't live up to expectations.
Ravi, do you believe that this rate cut is the RBI's way of being ahead of the curve, and that there are meaningful risks, downside risks to growth?
See, for India, in terms of GDP growth, I think post the elections we could see a real bump up, because of the fact that the election concerns are behind us, and if NDA comes back to power, I think they will take up more initiative with more vigor. In the first tenure of theirs, they have put all the building blocks in place, and post the elections, I think they have a perfect ground on which they can build. So if the NDA comes back to power, I will have no doubt about the growth going beyond 7.5, 7.6%. But for any reason, should there be a change at the center, then my sense is most of the things the NDA government did would be undone, and that would be a great concern for growth.
Ravi, have to talk about, what's going on with the auto space. The fact that you've seen about 3-4 months of a steady decline in volumes, and now that's reflecting in numbers as well. Tata Motors, for instance, I mean, what explains the kind of hit that they've got? And last night you would wonder how much more can the stock fall from here, and it continues to surprise you on the downside. What do you do with autos now? You think these declines that a Maruti, Eicher, etc. are seeing are good entry points, or would you say wait it out, wait for the first signs of a revival coming in their volumes, and then perhaps start to nibble in?
See, whatever happened to autos is understandable because of low volumes. This quarter, festive season was not a great festive season for these companies. Inventory buildups have happened, as you all know. My sense is that these inventories would get cleared pretty soon. Maruti is talking about more product launches. They've been able to maintain their market share in an industry environment which has been benign, and I expect the industry environment to be benign. Coming to the two-wheeler space, Hero MotoCorp may probably do well because of the rural thrust which the government of India is now giving. It's just not about the cash, the agriculture income which the government just announced in their budget. It's also because of election spending. There is going to be a lot of consumption both in the staple space and in the discretionary space. For example, if you take the election spending, in the last election, 400 billion I mean 40,000 crores, put it this way, 40,000 crores was spent on elections, out of which about 600 to 700 crores only was spent by the government in terms of, you know, the travel expenses of all the election officials and stuff like that. The rest of the amount, which is roughly about 39,000 crores, was spent on campaigning. So there is a lot of money which can flow into the hands of people and get them to consume more. So my sense is that Hero MotoCorp is a good bet in the two-wheeler space, and Maruti could still be a bet in the four-wheeler space because they are market leader and they will continue to be the market leader. Right point, right time to enter. Our historical analysis also tells us that, you know, when the oil prices increase and these sort of things happen, the market reacts that way. People tend to postpone their purchases, but that's only short-lived. It's a question of time when customers may come back to buy two-wheelers and four-wheelers. So we like these two, we like four-wheelers, we like two-wheelers, we like auto anchors, particularly in the tire space and in the battery space. Because if there is a concern that OEMs may not deliver the type of growth which one is anticipating, you could expect the secondary market to do well. So MRF is one company which can live up to the replacement market, and so is Excite. So this is how we're looking at the auto space. To the question whether one should enter the sector now, my sense is they should, because it's a question of time when most of these stocks will rebound.
Ravi, lastly, you know, how are you looking at the risk there is with the upcoming elections and how that may influence the markets?
See, I think the biggest trigger for the market from now to the elections is the election outcome itself. So no matter how bad the earnings are, markets will react to that. Markets may react slightly positive to the Q4 numbers, which I think will be better than Q3, because the pain of the oil prices, the inventory losses which most of these the oil and gas companies have accounted for, this will not come back to haunt them again. Agriculture, rural consumption and consumption in general being good, we think FMCG and discretionary will do well. Banks will do well because the credit cost for most of them is coming down. All of these are good triggers, but my sense is the biggest trigger for the market would be the government election outcome of the elections itself. Like I said before, it depends. If the NDA government comes back to power, you will have a good H2 CY19. If there is a change in guard, then we'll have some trouble, at least in the near future post the elections. Our historical analysis tells us actually that in the long term nothing matters. What matters is the fundamentals of a company. So maybe after the elections, first 3 months would be bad if there is a new government in place. It will be fabulous if the old government continues. But like I said before, these things are only short-lived. Post that, it's only the fundamentals which will carry forward the market.
Okay, Ravi, we leave it at that. Thanks very much for joining us with your take on markets and macros.